I know, in a while.
In a while. So welcome back.
Thank you.
So today we're going to be talking about cost dollar averaging, right? And then a little bit about market talk. You've been gone. It's been some time. We have like weeks to kind of catch up on. So for those that are just tuning in, we have our first segment. So we're going to have some educational material. And then if you want to know more about the market, this involves all the major, so the top projects, the larger market cap projects. We'll do some charting for that. Ready?
Yes.
All right. Now, as always, we have the disclaimer. So we'll be right back. And let's get some education going. I feel good this morning. See you in a minute.
Awesome.
All right, Will, we're back. So what is this term? And I kind of do want to, we could get this one right out of the way. So DCA, we hear it time and time again, and yet being in the crypto space for years and then also just trading, I don't even follow it sometimes. I'll say it. I'll put it out there. I honestly, sometimes you kind of like forget about this kind of stuff, right? You kind of fall for that FOMO moment. You forget about it. But let's just go over the basics. What is cost dollar averaging, DCA? What does that actually mean? What does it entail? Is it complicated?
Yeah. So obviously the goal of any sort of investment is to maximize your profit at the end of the day, right? So you're given a pile of cash, no matter wherever it comes from or whatever else like around your portfolio or percentage it is, you have some amount of cash and you want to invest it in a market. Now, markets are kind of random, as you know. We do our best to forecast them at FlourishingAI, but there's still a random component to markets. So the question is, how should you invest this money? Does it make sense to just put it all in at once? Should you just divide it up in various different ways? Or what should you do? And generally, DCA is kind of there's two different ways to do this. The averaging comes from you breaking up a chunk of cash into pieces and then like strategically making investments along some kind of rule set schedule, something like that with those pieces. The average of all those purchases together is the dollar cost average.
Your average.
The average price that you bought in at. And the goal is to get that average closer to the bottom of where that market was or touched so that you can maximize your profit when you sell. Now, the problem with markets is that you never really know where the bottom is. You never really know where the top is. True. So how do you do this, right?
That's the trickiest part, because I was going to say, you can have so let's just say we're going to buy $100 worth of a certain project every week, right? So the price is going down and your average is getting lower. So again, that's the whole point there. But on the flip side, the price could also be going up, right? Because then you might have that moment, oh no, the price is going up. And then whatever cash reserves you might have on hand, you might say, I want to put it all in at this time. But you then completely destroyed your trading strategy if this is what you're implementing, right? So it kind of goes both ways. So the big question here then, even without, I guess, going further into this, is it bad to actually have cash reserves?
I believe everybody should have a cash reserve because life happens, right? Yep. You should never be all in on the markets, right?
Well, so let's rephrase that. So cash reserves as in, like, of course, if you get like unemployed or something happens, like exclude all that. I'm just talking about, so let's be like trading specific. So let's just say you have a portfolio. Is it safe to say you want like 5 or 10% to just be cash, like liquid, just waiting, and then part of this DCA strategy, or 15%, 20%, or is there? That's all. Again, it's for your strategy.
Yeah. So there's different ways to do. Like I said, there's different ways to do DCA. You can do a kind of, I guess, the easiest one to visualize is the time-based one. So let's say you just have a schedule where every week, every month, or something like that, even every day, you just buy X percent, say like I'm going to buy $100 every day.
Daily would drive me nuts.
Yeah, or every week, right? $100 every week. No matter what the price is, I buy it. Right? And then at some point in the future, your average is the average of all those purchases together. And at some point in the future, the price goes up and you sell it. Right?
Mm-hmm.
You can even sell it on a schedule too, right? Every time it gets above the average, you sell a lot. You sell another lot, then another lot, right? You can do this type of strategy.
So at that point, we're kind of laddering ourselves out of those positions.
Mm-hmm, mm-hmm. And whales will do that. If you've accumulated, a very large position, you have to do the same approach to exit that position. Otherwise, like you cannot sell at the price that you need to sell. Otherwise. So this is a strategy that whales will use to sell, even as the price is going up, they're selling a little bit, because they'll never, even if they knew what the top price was, they would not be able to execute one single sell at that price. It would just be impossible. There just isn't enough buyers to buy their sell order. That makes sense. Right?
Yep. So this world, in the crypto space itself, it's way different than like the stock markets. Yes, there's buy orders, you have all that stuff, but in crypto, liquidity and then price impact, there's a lot more variables, components involved. So you might be sitting there with 1 million tokens thinking that, the price could go to $1, but if there's low liquidity or if there's other things happening, you're not going to have $1 million. There's other components at play. But one thing that I do want to hit on is whale activity. So there are smart whales and then there's not so smart whales, right? So you do have, unfortunately, in the space, especially with the small cap projects, you have whales that do actually decide to exit all at once. They do that. Mm-hmm. And what's interesting in the decentralized world is you have all these bots that are out there, right? Including Fate, which is cool. But the moment that happens, there's that huge price impact. So you'll see out of nowhere, like a token will just go 30%, 40% in the red. And all of a sudden you'll just see like buys, right?
Mm-hmm. Mm-hmm.
And I can't tell you personally how many times I've seen that happen and I wouldn't necessarily see a cash reserve and be like, I'm stuck. There's nothing that can be done. Like you're out of ammunition. You can't do anything about it, right? You're kind of just stuck there. So this DCA strategy and forcing yourself to hold a certain reserve in a USD or stable coin, regardless, again, if the price is going up or down, you're saving it. That's part of the strategy. You ultimately need to have a strategy in this industry.
Yeah, well, the second form of DCA, it would protect you against that situation, which is the price-based DCA. And this is commonly called grid trading. And you'll see a lot of these kind of simple grid trading bots out there. You just say, well, I have some amount of money, $1,000, $100,000, doesn't matter. I'm going to buy $1,000 here, $1,000 at this price, $1,000 at this price, and then just go all the way down to where you think the floor might be. Right. And there's all these different ways to kind of predict what the floor could be. Right.
Now, one thing also that's kind of interesting with this space, and this is based on my experience, I like to get your input on this as well. But anytime, again, this is just my opinion, but anytime I see a project that just gets hit with like a 50% or 60% hit, there's usually like a bounce. Like there's a fluctuation there, at least like from the initial part. And if it's a strong project, you ultimately then see a huge bump right back up. So for those that are there in the moment, they're ready, right? Cash reserves, we're ready for this. And if you see something like that happen, they go into it. And that's an easy way to make an extra like 10, 15, 20% within, we're talking about like minutes, especially with some of these altcoin gems. Like that happens all the time.
Yep, it does. It does. And it's because a lot of times with projects with strong fundamentals, there'll be, like you said, a lot of people, a lot of bots waiting for this type of 2 standard deviation dump. And they'll take a look at it. What's a normal amount of variance in this equity or market or whatever? And then they'll say, okay, so if you calculate the variance, then you say, well, there's a 5% chance that it dumps like completely under that. And I'll put all my orders there, right? That way, if it dumps just a little bit, you'll miss that. But if it gets the what we call the what's the term, BTFDD, by the fucking deep dip. Have you heard this term?
I haven't heard
It's
that
a term
one,
in
but
crypto,
I like that
right?
acronym. Okay.
The term came from this mentality that there are these random, just crazy volatility spikes, even in major coins like Bitcoin. Even will have this periods of low volatility followed by this really high spike down or up.
BTFD. So, I like it.
Yes, this is a term. So there's a whole class of people that all they do is they wait for that crazy moment where there's just really high volatility and then just buy only that.
So that in itself is a strategy then. So just that.
That itself is a strategy. It's a kind of variant of DCA, but you're eliminating the top half of the ladder, if that makes sense.
True.
So that your average is all the way down at the bottom. And the trade-off is that may never happen. Like if that type of moment never happens, you were never invested and the price just goes away from you and keeps going up.
Okay. That's another strategy that you could then combine with DCA, right? So you could actually, again, you're putting, it's all based on percentages, but you have your cash reserve, you're doing your periodical investment, and then you have an additional reserve of that's then based for buying the fucking dip.
Yep.
Right. So you're like, I'm going to have a 50% reserve of that to then go into this.
Yeah. I mean, this is starting to get into more complex strategies where now you're managing quite in depth the mathematics of it. Like, okay, so I'm going to take 10% of 50% of my money and make a purchase here. Right. And then now you're doing a lot of math and a lot of management. So you're starting to get kind of into these more automated systems that help you just with that piece of it. Right. And this is one of the most we worked on with Fate as well, is that it'll say, well, you can tell Fate, I want you to trade this market, and then we'll do the math for you. And so that's a whole other thing that people will do it with it, is they will turn off Fate automatically trading the standard stuff and say, well, I want you to trade this market right now. I want you to trade, and then it'll do all the math part for them.
Okay. Yeah, I was going to say, it ultimately just grab a piece of paper and actually plan things out, right? You can write everything down, come up with the strategy and stick to it. I feel like consistency and staying into that rhythm and staying part of that is also something that a lot of traders don't typically do, especially those that are getting into the space, right? How many times you actually sit down and say, okay, here's my strategy, here's what my plans are. A lot of them don't. Really, they just funnel into these meme tokens, these other gems are like, let's do this. So the interesting part though is, so you're just talking about calculations, right? So the math that's involved and
there's different ways.
The work that's in there in the back end, but what I'm getting at, there's so many bots that are out there that do that like instantly. Like that's what I just process, like I'm trying to process that in my head like now. So when you do see projects that just hit like 30%, there's bots that somehow find that in that split second and buy it up. So, us being humans, one, we're probably working with family, we're doing something, we're not always in front of a computer, right? I mean, that's one disadvantage right then and there. But then the other part is the psychological aspect. You just see something dump 30, 40%. Are you feeling inclined to go into that project? You might hesitate for a bit. But again, I've been there where I see projects go down 40% and then shoot right back up 20, 30%. Just like as if nothing even happened, right? That happens a lot.
Well, a standard ladder for DCA is they'll take, let's say, $1,000, and then they'll split it up into 10 orders, and each order has the equal amount of cash in it, right? So it'll be like $100, $100, $100, $100, like this. And so the effect of that, I think we covered this briefly in a previous episode, the net effect of that is that your cost average is always 50% down. And that is what creates the idea of the 50% Fibonacci retracement. It's because all these dips that happen, that means that most people's average is halfway down that ladder, which is also the 50% Fibonacci. That's why that always becomes an important level with like any tradable instrument.
So that's another topic. We're going to have a show on that as well. So just straight up Fibonacci will have all the different, what I like to call like the rainbow. I always see like different colors, right? You always see them on the graphs, like stand out. Colors, yeah. So we could get into that.
But there's different ways to do your average too. To kind of, you can weight it to where your average is lower down or higher up, depending on your belief about ultimately what the direction is going to be like. So you can create a ladder where the bottom buy order is twice as much money as the top buy order.
Okay.
And so playing around with ladders like this is one of the things that Fate does as well, is like it tries to figure out like what should the ladder look like. So if you put, your smallest order in let's say that your bottom order is $200 all the way at the bottom of the ladder and your top order is $100, then if you hit all the way down to the bottom, or I guess it doesn't even matter, the bottom price that digs into your ladder, your average will always be like basically 33% from the bottom. It'd be like 2/3 of the way down will be your
Makes
average.
sense.
That makes sense, right? But the other thing too is that you're not being as efficient with your capital if it doesn't dig all the way down to the bottom price that you think it'll be, right?
Sure.
So that's the trade-off there, right? So you've used less of your capital for investment, but your average is now better.
Sure.
So that's the trade-off with different types of DCA ladders that you can do.
Okay. All right. I'm also just watching the time. For those that I think that want to learn more about this, so Flourishing AI, so that's the project that you're with. You're going to start providing more information about this, training and topics, content, right? About these types of stuff. So definitely head into their Telegram group. I have all those links and everything within the description below. I do have one last question about DCA though.
Sure.
So let's get this one. Then let's get into this market talk. So let's just say with market conditions, projects, all this, there's like this perfect storm, right? Everything's always red. It just keeps going down and down and down. So at the point in time, let's just say you have your strategy, right? You spent hours on this. Will, I spent like 5 hours on this, all my money, whatever. And all of a sudden you're like, okay, the price kept going down and all of a sudden I'm out of cash. I'm out. I followed my strategy. I did all this stuff. I was doing it weekly. I was doing it every 2 days, 3 days. I'm out. And the project itself is healthy, right? But the price still looks like it could come down. Do you think that there's a point where people might want to then sell to then get cash in thinking that it might go lower again? So like to replenish their cash pool. Does that make sense?
Yes.
And obviously the trade-off to that is if the project goes up, then you could have either lost because then you didn't average your price in correctly, right? You might have had too much at a higher point. Then all of a sudden everything goes up. Right,
and
so
this is a typical, this is very commonly happens, this scenario, like in all sorts of tradable instruments. It's happened to me many times as well, where like I thought the bottom was here, but it was actually way lower down. And so there's kind of two scenarios now. So in the equity space, you have this idea of a wash sale rule. So the problem you're going to run into is that your average isn't low enough and it keeps dipping. If you sell now with the intention to rebuy it at a lower price, you've created a wash sale, which now like erases your ability to deduct that on your taxes. So they've kind of tried to prevent people from doing that in equities. Now in crypto, since it's a commodity, I don't think that's the case. Like, don't quote me on that one.
Okay.
It may be a little bit
different. We have our disclaimer.
Yeah, I really don't know the answer to that entirely.
I know we're putting you onto this on the spot with this. But that's also why we like going live.
But yeah, that's usually a hard one. Like what you need to do is take a step back and analyze, if you sell now, what are the chances that you've sold the bottom? Right. And there's always, and typically the odds are against you at that point. If the chart is at the bottom, and it's been going down for a while, even below where you think it could have been, if you sell at that point, typically that's the bottom and you're the sucker, honestly.
That's flat out. You're done.
Just if you just look at it from like a gambling odds perspective or a stochastics perspective or anything like that, statistically the price, like the likelihood of after something dumping so far to where it's like below what everybody expects it to dump to continue going down is very unlikely.
That's true.
Right?
Well, that's what I was going to say. The other part to that is in the event that, so one, I mean, to take a step back, you're DCAing, you're buying periodically, right? If you're buying on a specific altcoin, right, and you're doing this every week, every few days, you're watching the progress of that of the project itself too, right? So you're not going to actually keep buying in if the project's bad. So that's one other part that's maybe common sense. So you're buying into this project, and at the point where you might run out of cash reserves, you've also been buying it because you believe in the project, and that's also the other part that I'm getting at. Yes. You might have that FOMO feeling that you can't buy anymore, but you believe in it, and the other side is that it's going to come back up again, right? That's the whole point. Also, you believe in the project and you want to see it to continue growing from there.
Yeah, I mean, it's always a good thing to take a step back and reanalyze your whole investment thesis. Like, if it's continuing to go down, take a look at the fundamentals. Are the fundamentals still strong? Like, is there anything weird going on in the project that you did not expect that you need to take into consideration now, right? Things like that. And if your original thesis is now invalidated due to that information, it may make sense to take a loss, right? It may make sense.
Yeah, there's actually nothing wrong sometimes with taking a loss.
If the thesis is still there, then it doesn't make sense, right? Yeah, go ahead.
The other side is, I was going to say, the other side, just like the laddering, so the exiting of that, perhaps your strategy might also then change on that, right? So instead of then looking for a profit, you might want to schedule it so that you're breaking even then, maybe, right? Or taking a smaller profit. The laddering system might then change from there.
Yes.
Different options. Sure. But reevaluating, understanding where you're at, that's the most important part. But don't sell if you believe in this project. That's the whole other point. These gems fluctuate just as fast as it went down. I'm telling you, from what I've seen, there's projects that go down in a month or so, but then you'll see them shoot right back up within days. That's how fast all this stuff can change. It's insane.
Yeah, and it's, being on the other side of the coin here, I see stuff from the back end where it's like, all you need to do is turn on a major promoter or an advertising network or something like that, and it'll just shoot straight up.
That's it.
Right? And it invalidates any sort of technical analysis that just happens. Right?
Yep.
And, from an outsider, you don't know that's happening, right? So you're the person that doesn't have access to that type of information. So you sell out of fear that it's going to keep going down, but really you don't know that this event is coming up. And like I said, you become the sucker that sold the bottom. You have to realize that people that own legitimate companies that have solid projects and solid fundamentals, they don't want their token to go down either. Like, I think almost universally, all of the founders will have the most tokens out of everybody. So they're looking at the token price and they're just like, oh my God, and they're freaking out behind the scenes, trying to scramble to figure out how to make it reverse. Right? That's usually the case behind the scenes, and people don't see this happening.
Oh, yep. Well, that's also the fun part. I think that's kind of like the thrill. And that's what I think that's why a lot of people come into the crypto space for this specific part. Just my opinion on that.
This is the same with equities too. Like, you found your company IPOs, and then you're a founder of this company. Now they're called shares. They're not called tokens, right? And then you see the share price going down because these people are dumping your company's shares. And same type of deal. Founders are freaking out. They're like, how can we recover the price of our shares? Same deal.
Yeah. Market conditions, or you priced it too damn high. So there's an issue. All right. Quick, let's go over some TA. You've been missing, my friend. And I feel like since you were gone, the market went into turmoil. Everybody was freaking out. So, oddly enough, now that we have you on, today looks like it's actually a green day. So can we go over some charts? Can we see if Bitcoin is still within some of the channels that you had drawn before? Can we track all that?
Yeah, let's take a look.
We're going to end this on a positive note. We got Will back. I'm excited for that. I also saw, again, for those that are just tuning in that aren't familiar with Will, so he's from FlourishingAI. and we keep hearing fate in the background, right? So fate is, I would say, this is my opinion, so the real first true 100% artificial intelligence trading portfolio manager. We're not going to say bot. Careful with the words on that. But there's a lot of cool advice within there. So Fate is free for you to access. You could ask her questions, go in there, go into the Telegram. Again, all that stuff is in the description below. Go check it out. It's awesome.
Mm-hmm.
But I also forgot. So I brought that up because I was in your Telegram group and I saw that you made a special announcement. I didn't get to watch it. I saw the people saying that they want to watch it. Can you give us, like, is there a brief summary or do I have to watch it?
The brief summary is that much, I guess, related to what we were just talking about, our own token has been dumping recently, and we've taken kind of the equities model in this regard. So in the equity space, insiders and major stakeholders are required to disclose trades. Like, this is legally required for them. And I want to start setting a precedent in the crypto space as well in this regard. So I kind of began the precedent in that video to explain, like, how many shares are being sold and bought by insiders and, you know, things like this.
Okay,
So
I like that.
I hope that's really elucidating for everybody, because like I said, I'm a big believer in transparency and fairness and disclosing everything that we can disclose to investors in AI so they can make smart choices about their investments. And we hope that by doing that, we'll have a strong community, right, that believes in us as a team. Because ultimately, at the end of the day, when you invest in a company, you're investing in a team.
True.
Right? That's really what it comes down to.
Yeah, and there's a lot of shitty teams out there that are somewhat good at marketing or are good at magic. And there's absolutely nothing underneath that tarp that they're trying to pull out. So be careful with that.
Yeah, you can pull out a lot of cheap tricks and they'll work in the short term, but that will not work in the long term.
No, never. Nope. Definitely not going to happen. All right, we got charts. Pulling those up. Good.
Where are we at here? This is the S&P futures, right? Usually what I start with. And we have S&P futures on white here with the moving average. This, I think it's 200. Is that right? 150. And above this in yellow is gold. And in orange, we have oil. Underneath here, we have the 5, 10, and 30-year bonds, and DXY, which is the value of the US dollar against other currencies. And all the way below here, we have the VIX. So you'll see here, we, like we were talking about many times before.
Well, for your typical noob, they're just seeing lines right now. That's it. Again, my whole role here is to dumb things down, but if they're just looking at that, I see squiggly lines.
Yeah.
That's it. It's a lot of charts.
There's a lot here.
What we're looking for is what we're looking for is correlations, though, right? So whenever you look at stuff aside from just long-term perspectives, right? We're not looking at charts within like a 5-minute time frame. You guys can look at the bottom. You can see that we're looking at monthly, right? We actually
these are daily. So if you go all the way back here, this is January 1st, right here.
Okay. But again, you're taking a total outlook across multiple markets to see direct correlations amongst all of them.
Mm-hmm. It's always good to start with the big picture and see kind of what the macroeconomic environment is, and then you drill down from there. Never start looking at a microscope and then start from there.
Terrible.
You will lose context, right? And then things will easily go against you.
Yeah.
Always start from the big picture. So anyway, I think the last time we talked was in early April, and I said hedge with a VIX long around here, and I hope that many people took that position because the markets did dump.
I think it was the last time we were live. It was the end of March, so I think like the end of the first week.
Yeah, so that was the top here. So yeah, markets did go down. We're seeing a bit of a reversal here, which is pretty positive. We bounced right off this 382 Fibonacci level, right? And this is the 786, which is the opposing one of this one, right? So we're kind of in this range right now. Now, what can happen here is we can get kind of rejected at this area here where we have the moving average and the 618 fib. But I think that it's more likely that this market will keep recovering upward at this point.
Okay.
And the reason I say that is because look back all the way to January. All of these major dumps we've had have always occurred at the beginning of the month. January 3rd, first major dump, right? Next one was February 2nd. Next one was March 2nd. Next one was...
Also, we have taxes also. Yeah. So there's multiple other events kind of happening in the front end.
Mm-hmm. Yep. So now people are paying all their taxes, right? So they're taking money out to pay taxes.
Yep. To then pay more taxes.
Yep. Yeah.
All right. Can we pull up some of the larger caps? So crypto specific.
So I'll go back to Bitcoin here. It's still respecting that green log trend line. It touched it, which is a perfect buy. Perfect.
That's what I want to show everybody. That's it.
Yep. Every time, right? Every time.
Yep.
This was this scenario 2 we talked about last time, where if this got rejected from this support, it would go into this deeper one and then come back. And that's now what we're seeing out was this. Basically,
I just have our
right?
thumbnails are actually hiding the month below. So I just try to zoom out from that. Let's see if I could bring this up here. Still the same.
Maybe make this go higher. Is that
just that our faces cover like after April, but we're up to date, right? So this chart's not from 3 weeks ago. This is as of current. So the red line that's going vertical, that's today.
The red line going vertical. No, this is May 2nd. So
okay.
Delete this.
We'll figure out
the reason why this red line is here. Go ahead.
No, I just want to make sure people can see the axis to see what the actual date is, because our thumbnails are covering the date. It's not going to have to do with your browser, it's just with the settings here. That worked.
Yeah. So this is May 2nd, this one here. Gotcha. Right. And this is because you've seen in the top here, this is S&P. This highly correlated with the S&P right now. Bitcoin followed the exact same path as the S&P. So that is to say, if the S&P reaches another market top at the beginning of May, right, just like it has been the past 4 times, Bitcoin then, due to its correlation, will also have a peak around the beginning of May, which is right here.
Will, can I ask you something? So you're using TradingView, right? Yeah, I'm not an expert in TA. I've said that multiple times. So I'm thankful. And again, I appreciate all your time and input on this kind of stuff. But let me ask you something. So you're on TradingView, and obviously you're on a website. There's a link there. Is this, and you have multiple forms of charting, this is something that you could ultimately share, right? Or no? Or could you make that like
yeah, you know, I used to publish these
certain
on
people or no?
Do what?
Could you make this like accessible perhaps for like a private community? Does that make sense?
Maybe. I don't know if you can actually lock a chart and only have a private community access it. Like,
but you can definitely, I know you can make it public to share,
publish it,
right?
And then it's public. Yeah.
Okay. Just putting that out there, just thinking about it.
Yeah, I mean, I could look into it.
No fact. I mean, there's obviously value behind this. Everybody that's watching this can see what we're showing them, but to then, you know, say like, here's my template, or here's the link to then log in, or to then actually view it and kind of go around, that takes it to another level, you know?
That's true. That's true. Yeah, I used to publish these years ago, just generally under
just
our
putting that out there. Maybe private communities, you know, content, just saying. There's value in that.
Definitely.
Okay.
Yeah,
so we hit that green line. That's what I'm seeing. We're going back up. That's good news. So where are we going to next?
Bouncing off this again. So
okay,
this kind of scenario 2 is playing out, and I expect this to go up back to here again and hopefully create a higher high this time, right? So we got rejected this time right at this 382 fib.
Yep.
The hope is that we break through it, create a higher high, but then this will, because this will be a correlated dump with the S&P if it plays out how it has been, right? Which will mean it'll come back down here again.
Which could be the new support. Yeah.
Right. And then hopefully this time the support will be respected, right? Because it's so close to this log trend line, I expect it to kind of go like this, right?
Yeah.
This
I'm
is
seeing
nice.
a lot of charts, ironically, like the last week or so, where people are calling for BTC to go down to like 30,000. But looking at that green trend line, it looks like that just wouldn't happen. Or
For BTC to go to 30,000, like
big
this
drop.
type of scenario would have to play out. Like I think that basically this would happen, and then like that would drag BTC
that's
down.
A big hit. Yeah.
So
I don't want to see that.
nobody wants to see this. The Fed doesn't want to see that either, right?
Sure.
Things to watch out for in this scenario are the dollar just getting higher and higher and higher and higher, right? It's already very overbought the XY. I mean, that was great for me when I went traveling around Europe, because basically it was almost 1-to-1 euros to dollars.
Yeah.
But that's very bad for equities.
Sure.
Right? Bonds are also very high, right? So there's going to be a point to where bonds will be attractive enough for people to buy them, and then they'll start going down, and then the stocks will start going up again, right? The more people that buy bonds, the lower the interest you get on them is. So that's kind of how they work, right? People are buying up this dip, and you can see this due to bonds rising. Does that make sense? How they're inversely related?
Yeah.
Right?
We actually look at accumulation zones. I mean, I don't have to look for the charts, but in terms of BTC itself and accumulation, that we're in one of those zones where it's the most accumulation within like the past 2 or 3, 4 years or something. It's weird to say that, but that's like actually what's happening in the background. You know, there's these huge wallets accumulating constantly. So they're doing their DCA. I mean, that's what they're doing.
Yeah, and you see even Fate's posting about this all the time, that money is moving off exchanges like all the time, right? During this area.
I'll pull up Michael Saylor. So I mean, he's like the king of like DCA. Whenever you see like him buying BTC, he's always saying DCA. Actually, interesting. But I mean, think of all the price points that they've been buying at, right? But they're constantly accumulating, buying more. Same as with the larger.
So I mean, when you DCA, like we were just talking about, you have to have an idea of where the bottom could be, right? To be efficient with your capital, right? So this is why you do this type of analysis, and you say, well, I would buy down to 32K, right? And that's your bottom order down here, right? Clearly somebody had this right. Their bottom order was down here, and immediately like filled it and went straight up.
Cool. Okay. Can we see, let's end this on with BNB ETH. You have those charts? Are those within the same frames, same zones, same channels?
They're still in a channel. BNB and ETH are still in a channel. I don't really have a concrete decision on these yet. The main thing that I'm tracking right now is the total 2 over BTC USD, which is the altcoin total market cap in terms of Bitcoin. And so this is kind of 1 over the Bitcoin dominance. That's Bitcoin dominance chart is kind of a normalized version of this. So if you see that this is just kind of ranging right now, you see how this is just going sideways. That means that alt season, we had a little bit of an alt season in March, but it's just kind of leveling off now, and everybody has a wait and see perspective. So
right now, CoinGecko is saying that Bitcoin market cap dominance is about 38 or 40%.
Yep. So this still needs to break out to the upside or the downside to really tell us whether it's truly an alt season or not yet. And that's going to be basically dependent on equities at this point. It's going to go all the way back to this. If scenario 1 happens, we peak the beginning of May and then go down. That's going to, there's going to be no altcoin season, obviously, right? But if we kind of come out of this and this was the bottom in the beginning of the year and we continue upward here, then Bitcoin will go up and then alt season will begin. So, and that's why I believe that this is just trending sideways. It's waiting for a decision from the equity space. So
sitting on the sidelines as usual. Okay. So positive note, it looks like we're still, I mean, we're in those channels, which we had weeks ago. So everything is still.
It's still the same pattern all over again. Sell
Yeah.
this peak, buy this trough. It's one, again and again and again. This is all accumulation though. Take a look at the big picture. This is a whole bunch of whales accumulating. It pumps a little bit, comes back down, they accumulate more. Pumps a little bit, they accumulate more.
Yeah.
I've seen this type of situation play out many times in the past. The problem is that most people are not able to zoom out enough to see the bigger picture of what's going on here.
Yeah. Well, I've said it multiple times. I think Bitcoin itself is primed. Again, this is just my opinion. It's primed to be over $100,000. ETH, 7,000, 10,000. The time frame in which all that happens, and again, it's all relative, but I do believe that it's primed to get there, and I think that it will eventually hit it. I can't say an official time, but I think it will. One day it will be there.
During a bull run, you should want to acquire Bitcoin or ETH or BNB, right? Nobody thinks about acquiring cash in the middle of a crypto bull run, because what you're going to want to look for is coins that are gaining value in terms of ETH or in terms of BTC, right? And that's going to be a multiple on top of the amount of cash you would get back.
Mm-hmm. True. Yep. And then the money kind of trickles down. So high caps, mid caps, low caps.
Yep, exactly.
Process repeats. Then the memes come out, the metaverses come out, repeat.
Yep. And then it comes, this whole FOMO thing. Yeah, exactly.
Yep. All right. Let's end it on that. So we had a few, I think, good strategies, some educational stuff at the beginning, which I like. And again, I want to keep doing that. And ironically, I feel like DCA and everything still applies to even expert traders. Sometimes we forget to have cash reserves. It just happens.
When you're a good trader, you can use, expert traders also use DCA. They just leverage their information, their analysis of the market, to kind of set where the top and the bottom of that ladder should be. And if that ladder should be kind of like this, or shaped like this, or like this, right, in regards to cash positions per price or per time, right?
True. All right, I got this cool stuff. I got my Stream Deck out. So watch this. You ready for it? This is something that I just started programming. I think this is the nerd aspect. I think you'd appreciate it, actually. Let's see.
Right.
Watch this. I'm going to click this button. Ready? See if it works. I have to have this one open. Let's see. How do you like that? So I could say
that's
share,
cool.
Subscribe.
Nice.
Don't forget about that. And then you ready for it? Here's the other part. I'm literally just clicking buttons here. Here's the cool part.
Very nice.
I like that. Yeah. See? So as always, don't forget to follow us. We're on Telegram, Discord. Well, actually, I got to put the Discord's link there. We're growing that too. Flourishing AI. You have your Discord group, which I don't see you guys actually marketing. We got to get that to grow.
Yeah, it's a lot of
content in there. All right, Will. Thanks for coming back. Again, let's do this weekly. That's the plans. I know you guys had to travel. And there's a lot of, I know you're working also 24/7 behind the scenes. There's a lot happening over there.
Yeah.
So thanks for joining us today. Thanks again for your experience, your knowledge on DCA and the different strategies, and for your market talk segment. For those that want to learn more about that or have questions about just trading, the links are in the description. Join us. We're all here. And I like to just say content. I like that the charts, being able to perhaps again share them. I got to figure that out for you guys, making that private and then sharing it.
Yeah. This might be a way to do it.
All right. I got this cool end scene, which I'm going to try out, but don't go yet. So I'm going to have that, and then we'll talk. So stay there. Hold on. I'm going to put this up for 10 seconds. So check this out, guys.